Hey everyone, and welcome back to the channel. Imagine having hundreds of millions of dollars in cash, a decades-long relationship with your bank, and then they tell you you have 20 days to get out. That's exactly what some major banks are doing in America right now, in a practice called debanking. It's when financial institutions refuse to open accounts or abruptly close them for individuals and businesses. And here's the kicker. It's not just about money. It's about politics and beliefs. The White House is gearing up to take major action against this, threatening big banks with serious penalties for what they call political discrimination. So what's really going on behind the scenes? And could this new push change how you do business with your bank? Let's break it down. Even President Trump claims he's been a victim. He recently shared how JP Chase allegedly told him to move his hundreds of millions in cash out in just 20 days. He'd been banking with them for decades. Then he says he tried to deposit over $1 billion with Bank of America, and they flat out refused him. He even claimed their CEO, Brian Moynihan, who was supposedly kissing his you-know-what when he was president, wouldn't help him after he left office. This forced him to spread his money across many smaller banks nationwide. It wasn't just him either. Melania Trump and Barron Trump also reportedly faced banking issues. And the Trump Organization even sued Capital One this year over alleged account closures after January 6th. He believes these banks discriminated against him and his supporters because the previous administration pressured regulators to destroy Trump by making banks worried about reputational risk. And it's not just conservatives. Bitcoin and other crypto companies have also faced similar debanking issues for years, claiming they were systematically shut out of traditional banking services. Some even called it Operation Choke Point 2.0, saying regulators under the previous administration pressured banks to cut ties with digital asset firms. Banks, for their part, say they don't close accounts for political reasons. They claim these decisions are about managing legal, regulatory, or financial risks, especially concerns about money laundering. But with so much at stake, what's the new administration's plan to tackle this head-on? The White House is now finalizing an executive order to specifically punish banks that discriminate against customers based on their political beliefs or involvement with crypto. This could happen as early as this week. The order will direct federal regulators, including the U.S. Department of Justice, the Consumer Financial Protection Bureau, and other supervisory agencies, to investigate whether banks have violated key laws, like the Equal Credit Opportunity Act, which bars discrimination in credit, or antitrust and consumer protection laws. If banks are found in violation, they could face monetary penalties, formal agreements, or other disciplinary actions. Regulators are even being told to eliminate their own internal policies that might have led to these debanking practices, especially those based on vague reputational risk grounds. In a significant move, the Federal Reserve, along with other federal agencies, have already announced they will no longer consider reputational risk when examining banks. This is a big win for those who felt unfairly targeted, potentially unlocking crucial banking access for crypto firms that have long struggled to get basic services. In fact, the Justice Department has already formed a task force to combat illegal debanking in Virginia, investigating credit denials based on impermissible factors. So, what does this mean for the future of banking in America? This push isn't just about Trump. It's about ensuring fair access to financial services for everyone, regardless of their political or religious beliefs. Banks are now under pressure to review their policies, making sure account closures are clearly documented and justified by objective financial reasons, not bias. They're also updating training for staff to avoid any perception of political discrimination. While banks like JP and Bank of America continue to state they don't close accounts for political reasons, they largely agree with President Trump that regulatory change is desperately needed and welcome the administration's efforts to provide regulatory clarity. Industry groups like the Bank Policy Institute argue that regulatory overreach and supervisory discretion have been at the heart of the problem. This executive order is a clear signal. Regulatory scrutiny is increasing, and banks need to ensure their practices are consistent, lawful, and transparent. This shift also opens up a unique opportunity for fintech startups. As traditional banks adapt, fintech companies can position themselves as valuable partners, fostering the development of tailored financial products designed for crypto businesses and ultimately creating a more inclusive financial ecosystem. This is part of the rise of what some call Web3 business banking, aiming for greater user control over financial assets. The goal is to move past the debanking controversy and create a more inclusive financial system where your money is always welcome, as long as it's legitimate. This could redefine how banking works in America, aiming for a system where fair access and transparent practices are the standard for everyone. What are your thoughts on this? Have you or someone you know experienced debanking? Let me know in the comments below. If you found this breakdown helpful, please give this video a thumbs up, subscribe for smarter financial content, and turn on that bell so you never miss what matters to your wallet. Thanks for watching, and I'll see you in the next one.